We spoke to Jim O'Neill. The man needs no introduction. What he says is that banks may have tightened interest rates faster than anticipated. Once that former UK Commerce Secretary Jim O'Neill tells your channel that he does not believe that this is a start of a major bear market, including in India. Says investors are profit booking after a sharp rally. Let's listen.
That central banks may need to tighten monetary policy faster than the markets had perceived. Yesterday's employment data was strong, and in particular the attachment with it that wages are starting to accelerate more in the US means that the Fed may have to raise interest rates more, and as a result bond yields rise even more significantly than the already quite important rise this year. As an investor, I would be watching carefully rather than being overly excited one way or the other. But I think it confirms to me that the markets have to be a bit more careful this year than they have been for some weeks and months because of events going on with rising yields.
The problem is US growth continues to be subpar than previous cycles, with inflation expected to rise, thereby the increased pace of hikes by the Fed. And wouldn't that puncture then market sentiment prematurely?
Until we see evidence of a bit softer growth, and more importantly, the market's adjusting to the idea that maybe the Fed raises rates 4 or 5 times this year instead of 3, I suspect we're going to carry on with a more jittery equity market than we have seen.
In India, post-budget, investors are slightly disappointed about LTCG and the fiscal plan. Much of the India sell-off is local also. So what do you think would be positioning of India? Because now it's a double whammy. Returns would be lower, valuations are stretched, and then you have the global sell-off.
The market's perceived your budget to be not showing anything particularly positively new in terms of economic growth or finance, and it's at the margin because of the policy step on long-term capital gains tax. That was a negative surprise, all else being equal. And then on top of it, of course, the markets spend the last 24 hours worrying about a tighter inflationary environment in the US and tighter monetary policies, as we discussed. And I think it's important, as I think I said to you last time we chatted, the Indian markets have been rallying virtually every day, almost irrelevant of anything that was going on in India or elsewhere. So very vulnerable to this kind of correction. And I think now, at least for the next few trading days, the international forces and concerns will probably take over any focus on domestic factors until we get the international market calming down a bit. It would be my guess.
A big voice there, Jim O'Neill, talking about the impact of the budget as well as what the implications are from global factors.